The stock of the day is brought to you by IG, Australia's #1 CFD provider. With over 17,000 markets and extended trading hours, turn US earnings season volatility into opportunity. Get started at IG.com.
All right, our stock of the day is Nine Entertainment. There were so many to try and pick from today, but we went with this one. Michael, I had a quick look through the numbers. There seems to be a lot of focus on pulling cost out, for 47 mil out of recurring cost in the last financial year, but also flagging another 50 million to come out in FY25. I mean, there are just so many headwinds in media right now. What did you look at in this result?
The cost out story continues to be a major theme, and it really has been that way, seems like for a decade or even more now. Just when you think that they've cut to the bone in these media companies, management are forced to go back to the table again and try and find some more savings. But it's a very, very challenging environment, particularly for the broadcasting arm. And we saw a similar sort of result from Seven West Media as well. It's just a very tough environment. Advertising dollars are few and far between. There's a lot of competition for that advertising spend as well these days. So these businesses continue to show signs of structural decline. The newspaper business seemed to have held up significantly better than the TV business, but then again, that wasn't amazing either. So yeah, tough days all round, I think, for most in the media space at the moment. Yeah,
there's certainly some bright spots, I think, in in some of those subscription elements. People are willing to pay for content, but certainly, Luke, you can't cut forever. Do you see any kind of bright spots ahead, or when some of this structural decline, may reverse for this sector?
Yeah, it is a tricky one. The core business is in a structural decline, but part of that structural decline is sort of cannibalizing itself with the digital offerings and looking to shift consumers into different ways to consume that media. So there's a lot of moving parts to it. And the other major moving part to this result from Nine was obviously the Olympics falling into FY25, but they would have incurred quite a lot of costs to get ready for that in FY24, which they break out in their working capital as well. But hadn't looked at Nine in a while. Get the suggestion of stock of the day, and it looked a lot like what I expected to see. It trades very cheaply, sub 10 times earnings. Still a big chunk of debt there, and that's a bit of a worry for me. Management, to their credit, the main reason why that debt increased was a share buyback and the dividend payment. So they're quite comfortable with the debt levels, to be fair, and you back them. You have to back them, I suppose, in a cyclical type business to be able to manage that balance sheet through the cycle. But look, it was as I sort of expected to see. The structural challenges are there. There are some green shoots from the digital. It looks like they're driving synergies across newspaper, domain, and some of their other things as well. So there's things to like. If you're in Nine already, I don't think your thesis is broken by this result. But I suspect it's one of those stocks that it's for the value/dividend investor. For anyone seeking growth, Nine and the media companies in general have struggled to give it to you now for quite a few years. So I'll say a hold if you're there, because it obviously fits your thesis, and I don't think it's been broken by this report.
Okay, a hold for Luke. Michael?
I'll go a hold as well. I think it's pretty tough out there, and it's hard to see it getting much worse. So potentially some of those bright spots might start to shine through.
Right, 2 holds for Nine, our stock of the day.
The stock of the day was brought to you by IG. Turn volatility into opportunity this US earnings season with extended trading hours on over 110 key US shares. Get started at IG.com.